Hello everyone. Already our market was falling due to poor IT earnings results, and on top of that, Trump keeps on adding new countries to his tariff list. So in this video, quickly in short, first let's look about it, like what countries were added newly during the weekend, and then we'll discuss our regular pre-market report for today, 14th July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. On Saturday, Trump sent his cut and copy paste threatening letter to European Union as well as to Mexico that he is going to impose 30% tariff on all products that US imports from European Union starting from August 1st. Regarding the reason, he mentioned in his Truth social media that European Union failed to reach the deal with US like after weeks and weeks of negotiations. And in addition, he demanded European Union to drop all their tariff to zero and allow open market access to US with no tariff. It's a clear bullying. And for Mexico, he said that Mexico is not doing enough for the US-Mexico border issue. Basically, at present, except India, he threatened every other major trading partner. Last week he already threatened Japan, Brazil and Canada, which was one of the primary reasons why market was falling last week. Now, during weekend, he threatened one of the main US ally, European Union, which is now creating a huge negative global momentum, and we could expect all the global market, including Indian market, to react for it. Already Brazil said that they will retaliate. In European Union case, most countries in European Union wants to retaliate, but the only odd man out that don't want to retaliate is Germany, as they export lot of automobiles. So today market will be looking at European Union for their response, and I expect market will react based on that. Here, please note, I believe today market might have two steps. One, initial reaction based on Asian market opening. Then second, between 12:30 to 2:30 pm, adjustment based on European market opening. It could be positive or negative. Even last Friday, US market closed negative as Trump threatened Canada that he is imposing 35% tariff, same effective from August 1st. Dow Jones was down by 0.63%, S&P 500 decreased 0.33% and Nasdaq was down by 0.22%. In case of US VIX, it increased by 4% and moved from below 16 to around 16.5. Regarding oil, on Friday, International Energy Agency IEA said that global oil market demand and supply are very tight than it appears, as peak summer increased the oil demand for the power generation. Hence, oil price increased 3%. During weekend, WTI crude closed at $68.5 per barrel and Brent crude closed at $70.5 per barrel. Then coming to Indian ADR, we discussed it in the last pre-market video. On Thursday, Infosys ADR fell about 5%. However, on the following Indian market, it didn't fall much. So Infosys alone closed positive as arbitrage correction, and same for Wipro ADR as well. Despite that, for the IT stocks ADR, still the arbitrage difference is around negative 2 to 3%. In banking ADR case, it closed negative, but the momentum last week in Indian market was much more weaker, so it got the positive arbitrage of around 0.5%. So banks looks good, IT not good. About GIFT Nifty, on Saturday morning it increased slightly after the US market closing. So equating with the spot market, it's indicating the gap up opening of 30 points. However, please note the price action is before the Trump's new tariff announcement. Hence, I don't think it's representative. Either way, while I'm making the video, it's the status. About institution, last Friday FII became mega sellers. They net sold for 5,100 crore rupees, and thus in the whole July month so far they net sold for 10,300 crore rupees. On the other hand, to some extent, DII supported the market as they net bought for 3,600 crore rupees, and if you see the whole July month, then they net bought for 12,400 crore rupees. Then coming to derivative market, in the index options, out of 36% open interest unwound due to weekly expiry, 29% new open interest were added on last Friday itself. But the problem is retail people sold the put options like crazy, and conveniently all those put options were bought by FII and proprietary traders. Hence, at present, both FII and proprietary traders, each of the participants individually holding around net 5% of the open interest on the bearish side. On the other hand, those net 5 plus 5, 10% open interest, retail traders holding on the bullish side. In addition, on the index future also, FII increased the short holding to 80% from 75% on Thursday, whereas client or retail traders increased their long position to 62% from 59%. Here, the surprising thing is proprietary traders holding 51% long position, but I don't take that as positive. Rather, I will consider that as just a hedge to their negative option position. Overall, based on the existing position, FII and proprietary traders makes more money if market goes further down means. On the other hand, retail traders makes more money if market goes up. As a summary, US market closed negative on last Friday. In addition, because of the Trump new tariff threat with Europe, at present US future market, all three major index opened further negative of around 0.5%. So nothing is in favor of global momentum. Hence, despite the GIFT Nifty positive indication, I presume potentially market might open negative. Please note, as I said earlier, opening negative is one thing, but market might react more or different in the afternoon as a consequence of European market opening. Then, as per stock open interest, IREDA, Infosys, Wipro, Coforge, BSE, DMart, Bajaj Auto and Polycab are some of the 111 stocks that got an increase in open interest along with a negative close indicating the short build-up. On the other hand, it's Mankind Pharma, Tech Mahindra, Hindustan Unilever, SBI Life Insurance, Paytm, Dauber, Hindustan Zinc and SBI are some of the 14 stocks that got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, HCL Tech, Ola Electric, Tejas Network, Nelco and Rallies India are some of the major Indian companies' earnings results are scheduled to release today. In terms of macroeconomic data, during the market hours at 12 pm, India's June month wholesale inflation is due. Then after the market close at 4 pm, India's consumer inflation for June month is scheduled to release. Here, please note in May month, India's inflation came very low 2.82% and for this June month, market expecting the same below 3%. Coming to technical, Nifty opened below 25,300 and continued its correction as the session progressed. For most part of the day, it traded below 25,200 and closed at 25,150. Thus, on the daily chart, Nifty formed a medium bearish candle with a upper shadow, which showing the lack of buyer strength. Then for the second day in a row, it formed the lower low and lower high formation, and in addition, Nifty fell below the 20-day exponential moving average as well as the midline of the Bollinger Band, which generally act as the key support zone. So combining all, it suggests sellers are gaining control in the market and the next support is at 25,000 mark followed by 24,800. Whereas on the upside, 20 exponential moving average around 25,300 is the immediate resistance. Then in case of Bank Nifty, it also had the similar price action as Nifty but fell less, like only 0.35%. So it outperformed. Thus, on the daily chart, it formed a short bearish candle with a long upper shadow, which resembles the shooting star pattern, meaning buyers entered the market but sellers took control of it in the end. Currently, Bank Nifty is hovering around 20-day exponential moving average at 56,750. As we discussed multiple times, it's an important inflection point. However, momentum indicators suggest a lack of conviction and further confirming ongoing consolidation. So looking ahead, 56,200 to 56,300 zone could be the immediate support, whereas on the upside 57,100 to 57,200 zone will be a crucial hurdle. So a decisive breakout in either direction will define the momentum. As per the weekly options data, the maximum call option open interest was at 25,500 strike, followed by 26,000 and 25,300, with maximum new call option rating at 25,300 strike and then 25,200 and 26,000. On the put side, the maximum open interest was at 25,000 strike, followed by 24,800 and 25,200, with the maximum new put option rating at 25,000 strike and then 24,800 and 25,200. Thus, from options data, it's suggesting immediate support is at 25,000 to 25,100 level and immediate resistance is at 25,400 to 25,500 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.